All right, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So markets staging a pretty good rally. Really, most of the work was done on Friday, though. If you take a look here, obviously we had that big rally, 1, 2, 3, 4, 5 up last week. And then this week, just kind of a drift higher. We did get a good sell outside move down on Thursday, and that was kind of just reversed today. So that sell Thursday was off the back of a very weak Treasury auction. There was a Chinese clearinghouse too that was having trouble. I believe it was they were having trouble settling some treasuries purchases. I'm not sure if they were cyber attacked or what, but that did contribute to the weak auction, it seems. And also Powell came out on Thursday and basically he tried to shut the door on the rally with his comments about basically saying that he would leave the door open to more rate hikes, essentially. The market did not want to hear that yesterday, and we did get a sell. And now we're getting a nice bid here. So market reversing. One of the things that I talked about, if you follow my channel, I talked about on Thursdays, I said it's interesting that the yield curves here yesterday were actually green. And you see the 210, and there's the 3-month 10-year actually pumping up a little bit. 5s and 30s coming back in today. But my point is, even with bonds selling off on Thursday and Powell's negative comments, the yield curves were continuing to uninvert, which tells me that the market may be calling BS on that. And now, as you see today, here we go. So nice rally there for the markets now. I do think we are very overbought, very extended. Well, I shouldn't say extended, but we are overbought still. 4 days of consolidation I don't think is enough to get through this trend line and through this sell bar, this breakdown bar. Remember, this is where we broke down from. There's not not that far away from this breakdown area. And then, of course, if you get through that, there's that red bar high. But additionally, looking at I don't show you guys this every week, but AAII, when you get big jumps like this, it does catch my attention. This comes out on Thursday. A week ago, or 2 weeks ago, the bears were at 50%. Remember when we were at the lows? Then after the previous week, the bulls jumped to 42, and basically a 50% increase and a 50% decrease, just about, or basically just I should say almost doubling, 50% decrease, and an almost doubling there of the bulls. So, things are starting to get very skewed to one side. Additionally, if we look at breadth, again, advanced decline on the NASDAQ hit another all-time low recently. So again, I feel like we say this a lot in here, but it's all the Mag 7, right? Microsoft, new all-time highs. Hey, just get in at any price, right? Microsoft, new all-time highs. Apple having a big rally here. Meta is pushing up against the recent highs here. NVIDIA added basically an AMD to its market cap in the last week. I should say 2 weeks. So just wild stuff here. Then you look at the Russell 2000, and that's a down week there. Before this, I would call it a bounce that we're getting today. So not a really good look breadth-wise. Equal weight is actually red for the week. So this is the equal weight RSP, or equal weight S&P RSP. QQQ equal weight is slightly green for the week, as opposed to the actual Qs, which are big green for the week. So Qs going into this resistance zone. That should be pretty stiff, considering we're overbought and we really haven't pulled back going into it. But I hate to say it, the market is strong, aka Magnificent Seven strong. But the indices are strong. I'll say that. So we should respect the move here. By the way, the bond market is closed today, so I'm doing this video on Friday, and that is it. There's an old adage, when the cat is away, the mice will play. That's kind of what I think is going on here today. So bonds not really able to keep stocks in check, and you're seeing this nice rally. But in any case, look for 380 or so on the triple Qs here, and then for the spiders, if this trend line, maybe even a pierce of that, could get some backing and filling done, and maybe even a pullback in this market. I think we are close again. I think sentiment getting a little out of hand here. We also have CPI next week, and next week will also be an options expiration week as well. A lot of calls are being bought, so keep that in mind. Anyways, Dow here, no breakout on the Dow. It is up 1% on the day. Again, not really doing the rally again, anything that's not, or anything that's like close to equal weighted, is not reflecting. It's just a Mag 7 rally, and you can see here, nope, no, not a terrible pattern on the Dow, just consolidating below that 100 moving average. This can still get up to 344, 344.50, but again, just stuck in that range and really a flat week for the DIA. We talked about the Russell. We went back into that trend line right there, and we pulled back, and we've been continuing to pull back now, just saving that 20 period moving average right now. If this continues lower, it's back to 165 there. Semiconductors via the SMH having a very good week as well. So through that trend line that we talked about, and now we're kind of coming into these pivots. So that should be resistance. What's interesting to me is, again, the SMH is heavily weighted towards NVIDIA. If you look at the SOX, Philadelphia Semiconductor Index, it's having a good day, it's having a good week, but it's nowhere near the highs, whereas the SMH is only 1% or 2% away. So again, this these weightings are very skewed in here, but in any case, SMH having a powerhouse move up 4% on the day, IGV up 2.36. That got through that little trend line, so we'll go back to we're going to go back and say 368 for this one, and possibly even double top. So IGV continues to be strong. This has definitely been one of the stronger sectors really all year. Has cloud software been, and we'll look for 368 in the short term, and then maybe a pierce of double top there on the IGV. Dow Transports, again, this is a weak sector, so it's a market of haves and have-nots. You can see here the DJT had that outside move down yesterday, and again, it is rallying, but we're barely just saving that 20 period moving average. We're not even close to yesterday's high, right? So there's yesterday's high, and we're not going to get anywhere near there. So again, here's your positive. You have a higher low. You could make a higher low here. But short term, really, all I see is 14.8 for this. Basically, a back test of that 200, and then really 15.100, 15.200 is going to be your big level if it can get up there. So, it's still got a lot of proving itself to do. And again, it's red on the week. So, lagging the market here. And again, transports are a leading indicator. So, anyways, interest rates. Let's kick it over here. So we talked about the spreads a little bit already, but the 2-year gained a little bit, and it's now going back into this trend line here. We did slice that trend line last week, continued a little bit down, and then starting to float back up. So we get back above this, and you get back above 5.1 on the 2-year. That could be very interesting, right? So everybody's talking about slowdown and all this stuff, and that may happen, but if this starts to break out again, I promise you, inflation is back. So that's going to be a big deal. Again, I still have that 5.33 marked. The Fed has not moved that. They have not changed their interest rate policy. So 5.33, you get above that, that's the effective funds rate. That could be a big problem. But right now, again, it hasn't made new highs, so we'll leave it at that. 5-year starting to recover here on the yield as well. So we sliced the trend line, and next level is right around 4.77. 10-year. So the long end is a little bit softer right now, as you can notice as I'm going through these. The 10-year not bouncing as much. This could go either way, but right now it's looking like 4.8 and 4.35. Those are your kind of levels here in the short run. In the 30-year, same thing. This is looking like it can go either way. Short run is 5% and 4.45. That's really it right now. But the 2-year is starting to firm up a little bit. And the yield, not the note, which is definitely very interesting considering all the hiking the Fed has done over the last 18 months. Anyways, XHB here, that is up 2% on the day. But again, red for the week. No, not by much, but it is red for the week in a market that is supposedly very bullish. Again, 78 is still going to be short-term resistance. We'll call it 79 now since we consolidated a little bit. And if we get through that, it's up to 81. So home builders holding up. On the downside, we'll look for 74 and then 72. VNQ also red for the week here. So REITs, commercial real estate, still lagging. Again, we hit that trend line last week and we pulled back off that. It's real simple. So that's the charts going to work there. And then look where we bounced at that previous double bottom. So VNQ is going to close above that psychological point of control, which is a positive. But in any case, pulling back here, and as you can see, as I'm going through all these sectors, you can see that the rally is very, very, very thin. XLF up 85 basis points today on Friday. Near term, if this market holds up, if this holds up, I'd say 34.50 is going to be your next big resistance. This trend line, it's okay. We've traded through it a lot, so I'm not sure how much I love it here. That much moving forward, but 34.50 is going to be a resistance. On the downside, probably 32.50 in your gap fill. That's what we're going to look for there. And another thing you notice too, all these charts, they didn't build any support on the squeeze up. So if we go down, we can go down just as quickly as we went up. Just be aware of that. KRE, what am I going to do with this? We repaired the chart last week and then all 1, 2, 3, 4 down. We're getting a dead cat bounce today. So again, regionals cannot seem to get anything going. Every time they get something going, it's lower highs here. So KRE still on the softer side. It is holding that 40 handle, which is important. But right now, not participating in the rally. KBE, not participating in the rally. Broker dealers getting a bit on Friday, but red for the week. All right, let's get over to commodities here because crude was on the move this week. So that took a little bit of a dump. We talked about this kind of bear pattern. So we stalled out. I talked about it earlier in the week. We stalled out. We kind of chopped here. So crude might want to go lower here. We had 2 outside moves. And then we went right into this 75 handle, and you're going to see that was a 618 as well, and we're getting a bounce there. I'm not so sure what it wants to do here in the short term. Near term, I could see upside to 80. This should be support right now. If this consolidates, it can go through it though. And then your next big level is right in this area, right around that 70 handle. And I'm going to show you on the weekly. That's where we broke out from this failed bear. Big wide range candle, right? Inside bar, bear flag. And that's where we broke out. There's also the 200 week moving average right there. So those are the levels I'm looking at on crude right now. So near term, I see upside to 80. Right now we're into support. If we break that, it's down to $70. XLE also breaking down as well. Didn't quite get to my 82 level. Got very close again. And it also got close to a 618 as well. Very, very close. But either way, getting a little bit of a bounce short term, 85 to 86 is going to be some resistance. And then, if we break 82, it's down to about 79. That is a good level for XLE. XOP into the double bottom there, and the 200-day moving average. So short term, we'll say upside to 143. If we break through the 200, we're going to 130, right to that trend line. Breakout area, little pivot right in that range. That's where you want it. OIH, nice little pattern here, tightening wedge. We went right to the lower end of that. Didn't quite get to the 200. I would prefer to pierce to the 200 and then a snapback, like a little trap move. But either way, getting a bounce there. OIH is the best out of the 3. And this pattern here on the weekly really is not bad. And the monthly, also not bad. So if this continues sideways and hanging out here, I like oil services for another continued move in a few months. Uranium continuing to grind higher. So, well, at least CCJ anyway. Look what it's doing here. So you're going to close above this pivot high. So, don't listen to me on CCJ apparently, because I keep thinking it needs to consolidate more and it continues to move higher. So big move here. Next level is $45. That's really, that's where I think it's probably going to want to go. I will say this, the reason why I keep saying it needs to consolidate is just look at this monthly pattern, right? It's vertical. So just be aware of that. Don't chase it up here. If you own it, trail your stop. If you don't own it, leave it alone. URNM acting well as well. Not as bullish, but it's still acting well. I like this weekly pattern. I just think it needs to do a little more consolidating. I like the weekly pattern on URA as well. And URNJ. These all look very good. So I like the look in some of these uranium plays right now. Nat gas pulling back a little bit. There was a report that Europe is the most stocked ever, I believe. So that did force price back down. And now we're into this trend line here and 50 moving average. You also have a little bit more support right around that 305 handle. This is an adjusted price of nat gas, so that would be a little bit lower on the futures. But in any case, we're into that area. We had no inventory number this week as the EIA was doing some maintenance, so we'll get that next week. We'll get both numbers, and we'll see how that shakes out. But nat gas pulling back in on the week. Dollar index here. So the dollar has been a tricky trade. So right now, so we had that kind of outside move last Friday. We closed below this whole range. All right, so we had this range here for like 5 weeks, and then we closed outside down. And now we're bouncing. So the dollar is still holding up. If you get above 106.22, I think the dollar can go higher. But right now you have a daily bearish inside bar as of right now. The bigger picture, though, this could still just be consolidation. My advice is just leave it the hell alone and let it do what it wants to do, because it's been a very tricky trade over the last several months. All right, over to gold here. So gold pulling back in. Told you guys around 1940, 1950, hitting the trend line. There we are. So there's no guarantee this trend line holds, but we could see a bounce here in the near term, right? So we'll see if that happens. You got all those moving averages right there. If it doesn't, it can't hold, we're looking at 1900. So that's going to be your next level there. If it does, you can go back to this double top, and if you get through that, it's really up to 2050. So gold hanging in there. Okay, I'll look at GDX. We haven't looked at the miners in a minute. So that's continuing to pull back, down 2% a day. A lot of these are getting hit. So Newmont, I told my members to leave this alone for a while. It needs to get down to 32, 33. And that's literally down to the COVID levels. And that's where it's trading right now. I think Franco reported, this one's in much better shape. They reported this week, but still took a pretty big hit. But for the GDX, I'm looking at, I did some work on it. I'm looking at, 24, 25 in this range here. That's kind of your next big level there on the GDX. So again, miners coming in under pressure here. And, even with gold near all-time highs, that's kind of the damage that, these rate hikes can do. All right, silver continuing down, so down 2.75% today. And it looks like we're going to lose that green bar here on a weekly close, which is a negative. It does not mean that it's going to go to zero, but it is a negative, and we'll see 2150 will be kind of a next level there. Well, there'll be a little bit of support at 22 with that green bar low, and then 2150. So we'll see how it reacts there. There's plenty of space for a higher low too, so I don't think this is over with, but definitely on the weaker side there. Platinum is getting super interesting. I am really liking this level down here. I'd like to see a little bit more downside in this. And then I am likely an accumulator here. Same thing with palladium. So I've been talking about sub 1,000 for a while, and look at this. So 200-month moving average. This is a big base of support there. So palladium definitely getting interesting as well. The only thing is this is very thin, so just be aware of that. These, especially palladium and platinum, can both overshoot to the downside and upside. So just keep that in mind. But I think they are getting attractive at these levels nonetheless. Anyways, copper pulling back. We talked about our trend line there. Nice dump there. You guys know I'm still looking for 340. And then Bitcoin, that was the star of the week. So got all the way up to 38,000 before pulling back. But this is still holding up. This is one thing I want to caution you on with Bitcoin here. If we look at the monthly, when I put our Bollinger Bands on, this is not opening up. So this is still pointing down. If we start to push up into that 40,000 handle, I expect that to be a ton of resistance. That's just what the chart is telling me right now. This is up on ETF hype. I believe this is just my guess of what happens. I believe when they announce the ETF, you're going to get a big pop, and then it's going to be a sell the news. That's just my opinion of how I think it's going to play out. The charts don't care about our opinion, though, and that's why we use them. But right now, it's holding up very well. But again, a lot of supply up here. Just be aware of that. And you are getting the alts to run. Take a look at what ETH did yesterday. Doge, Polkadot, XRP, Solana, Cardano, Solana even running today. These are all acting very well here. So the alt's continuing to run, on that news as well. By the way, I believe BlackRock did apply for an ETH spot ETF. as well. So that's helping the alts run very much so. Anyways, so spiders here. Just one last thing. So remember, next week, OPEX, we also have CPI on Tuesday. Markets are getting really overbought. I hate to say overbought because we did consolidate, to be fair, but we are getting a little long in the tooth. We didn't build supports on the way up. I'm seeing a lot of bulls out there, which does get me nervous, and we are going into resistance. So just be aware of that, and watch that 2-year yield next week. That continues higher. It's going to be a problem for the markets, but right now, as long as it stays below 5.33, I think the market's okay. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you guys all next week.